the Gartley pattern identifier, let's now look at the Gartley pattern scanner in Market Analyst. So here we are at the home page on Market Analyst. Let's go to the scanner feature. That's located under New. Then we go here to Scan. And if we haven't created any new scans, we'll have to do that. So click New Scan under Save Scans. And over here under Available Scans, there are a number of different criteria we can add to our scans. We're going to add the Gartley scan to our selected scans here. So click the arrow to move it over to Selected Scans. And on the right hand side we have properties and values, and these values we can change in the same fashion that we change the properties on the Gartley pattern identifier. We can do the same here with our scans. So under pattern type we can select both bullish and bearish. Minimum number of bars, let's set that to 3. And range high to low. Under reference and primary swings, let's maybe change this. I'm going to scan the foreign exchange market, so let's change this to 4 just to change it up here a little bit and see if we get some different results. And as I mentioned, we need to change these numbers based on what product we're scanning. Under pattern calculator, we can go to exact, or we can do high to low. And I'm just going to choose high to low here. If we get down to the exact numbers, we are going to have to come down here and remember these settings. A, B percent of CD, etc. Remember, we use the same numbers as we did on the Gartley pattern identifier. Here's an anomaly here, BC of AB. Let's change that to 61.8. And the tolerance, we'll set that to 20. CD of BC, change that to 127, and CD tolerance, let's call that 20. Okay, we should be good to go now here. And I'm going to click the Next button. Now this is where we choose the range of our dates. We can say I just want to scan today or yesterday, last week, last month. Let's select a range. I'll select a broad range here of, let's say, the past couple of months. We'll choose February 1st till today, and now I'm going to hit Next. And this is the place where we're going to choose which data file we're going to scan. And so for foreign exchange, you should have a category there entitled Foreign Exchange, so make sure you select that. Just move that over here under Selected Data Group, and it says here enter the name for your new data group. Let's hit OK and hit Next. And we're going to save this with a new name. Let's call it Gartley Scan Forex. And hit Finish. Okay, so there you see it on the left-hand side under Save Scans, Gartley Scan Forex. And here's under Scans, you can go in and add additional scans to that one that you've saved, or you can simply edit the one you have here. Here's the parameters. We can modify these going forward if we choose. And you can add different data groups or remove them, so we can see what I've got foreign exchange here. And if you want to change the range or do today, last month, whatever, you can change that here. So let's go ahead and execute the scan. To do that, we click this button here, Execute Scan, and we'll have the results showing up down here in the Scan Results window. On the left-hand side at the bottom, it says approximate time remaining. It'll tell you how much time, depending on your processing power of your machine, how long it's going to take. If you got an old machine, it could take a long time. Hopefully you got something that's serious in the way of horsepower under the hood of your computer. So I'm going to hit Execute Scan. See, it says approximate time remaining 10 minutes, 0, boom. So that was pretty quick. We only have 2 results here over that period on the daily. As we know, we're going to find more results, more Gartley patterns on intraday data simply because we have more data to look through. And this scanner, as I mentioned, only works on daily data, weekly data, So if you want to get more results than that, remember our swing points were set to 5 and 4. You can change those 5 to 3, 3 to 1, all kinds of different combinations of numbers that you can choose. So there's no limit as to the variables that you can plug in here to scan for these things. So let's just have a quick look at these two here, and I'll show you the limitations and the good things about the software as well. If you're only trading half a dozen pairs on Forex and you're looking at daily charts, you really don't need the scanner. If you want to scan the S&P 500, that's a different animal, or the entire NYSE, that's different. Looking at thousands of stocks versus 6. And like I mentioned as well, there's nothing better than the computer between your ears. But anyways, let's do that. Let's be balanced and use our brain and the software. And let's first look at the Australian dollar here. It says March the 16th, there was a bullish pattern that pops up. So I can simply click this button here, open as a workbook, and it'll open up all the charts of the scan that I just did. So the scan I just did told me that the Australian dollar had something going on here on March the 16th. And I look at this here and I don't really see much. It probably looked at it, said impulse, correction, kind of a mess here. I really wouldn't be interested in doing that one. The other scan was the New Zealand dollar. It gave us the same date, was March the 16th, and let's look at that one here. Okay, so this one here is a lot better. Check this out. The 16th, it ends here. We can see the clear symmetry. AB equals CD. We see the impulse here. It's obviously a trend continuation. We had a move up, correction, and then this big move up, correction, and it takes off from that point forward. So let's just confirm that it is indeed a trend continuation Gartley pattern. To do that, let's apply our price retracement tool. From this low here, let's turn on the lock. Low to high. Drag that across. Okay, so we can see that it hit the 786 and it bounced over here, 618. That's nice to see, but it's not imperative. To turn off these other lines, I was showing you previously how to right click and hit the trash can, removing selected levels. The other way that you can do it is you go over here to the structure panel and you right click price retracements and go to properties. Under levels, we can just turn off the selected levels. Done, close, and they're, oh, sorry. Let's do that again. Go to properties, levels, 786 we want to see. There you go. So there's your 786. Now let's see if AB equals CD. To do that, we use the price extension tool. And we go from this high here to this low to this high here. Drag that across. Now that looks really nice because that price extension right beside the 786. Nice trade right there. One other tool that we'll be looking at in the apprentice level is the Quadrilateral Tool. And just for fun, I want to show you how that works here. I'm going to turn off the lock, and we pick off the same points with the quadrilateral. And you notice from this low up to this high, we get the tip of the quad nails the exact bar when the reversal takes place. It doesn't happen all the time, but this is an example of time and price being used together and identifying a specific time. March the 15th is the day that the reversal was going to take place, and you would have known that by this bar here, which is March the 10th. We can just use the horizontal line here of the price extension tool to identify that this, ignoring the time element, but just simply the price. The horizontal lines here are telling you that there is going to be a reversal if the market comes down and touches this line here at 71.74. We put our stop below here at 69.56. That's just one example of how to find a Gartley pattern using the Gartley pattern scanner in Market Analyst. Let's do another scan. Okay, here from the home page of Market Analyst, we're going to try another scan. We'll go to New, Scan, select Gartley, Move it into selected scans, and we just confirm our settings here. We'll change the minimum bars to 3, and we'll change these settings here. BC of AB 61.8, tolerance 20, 127, 20, next. Okay, so as I mentioned, we can choose whatever range of data that we want. So for an example, let's say we just want to scan for a month of data. Let's say just for the month of February. Maybe we're looking at seasonal tendencies and commodities and comparing those and scanning. Just for an example here, let's look at February 1st to February 28th. Let's go to next. We're going to create a scan for US commodities. So what we'll do is enter this data group here, US commodities, hit next, and let's call this Gartley scan commodities, and hit finish. So there's our range, there's our criteria for the scan itself. Make sure you highlight it, hit edit, and we can confirm our settings here. Maybe for this one we'll just change the minimum bars to 2 for a change. Close, and we're good to go. Let's press execute scan. Okay, and we have 2 that show up here. Let's look at this first one here. Oh, interesting. It says matched here, and that's because our scan must have only scanned for one type of pattern, either bullish or bearish. You notice I hover over there, it says bullish pattern, it just says matched. It doesn't say bullish or bearish. So that means you need to go under edit and change the pattern to both. Okay, so we overlooked that. That's what happened there. So let's choose both, and let's try it again. Hit execute scan. Okay, now it's telling you exactly what type of pattern is bullish, matched. And so on February 7th, we had one on cocoa. February 23rd, one on soybeans. Okay, so why don't we look at this one here, soybeans. Double click that. If we look back here at the scan, it said that the soybeans completed a Gartley pattern, bullish Gartley pattern on February 23rd. So let's look at the chart and see what that looks like. So February 23rd is right here. Okay, so let's zoom in here a little bit. Okay, so there's the 23rd. It looks like we had some sort of AB equals CD, and then we have a trend move here. So let's apply our price retracements from the low to the high, like that. And then we'll put the price extension here. AB equals CD. Okay, there you go. So this is an example of, you notice here's 48.6. This is a TCG 486. So you could enter right on the fib number and put a stop way down here. If that seems a little rich for your blood, there's a number of different ways to enter this. Once we've confirmed it's a TCG 48.6, we can turn off the other fib numbers here. So let's go under properties, go to levels, and just leave 48.6 there. Okay, and we can get rid of this extension tool. We've confirmed that it's landing right beside the 48.6. So here's a great example of how the Gartley pattern scanner in Market Analyst was able to find a TCG 48.6 right here in soybeans. Let's look at the scan results here again. We saw cocoa as well. Let's double click that. And that said it completed on February the 7th. So let's look at that. Okay, so here's February 7th right here. Nice reversal that day. Let's zoom in here a little bit. So we can see obviously a TCG, trend continuation Gartley, starting from this low up to this high, and then a real shallow retracement. The most shallow one we've seen in the video series so far, but we still have to acknowledge that there are 38.2% retracements. And if you have an AB equals CD, in my opinion, you can still qualify that as a trend continuation Gartley pattern. A lot of traders are looking simply for 38.2% retracement, especially if it appears to be the end of wave 4 if you're an L8 wave trader, and that's what this looks like. And if you're an L8 wave trader, do yourself a favor and simply look for an A, B, C correction as part of wave 4. It's going to help your results tremendously. So let's just confirm that we got a TCG 38.2 here. It looks like it. We'll just confirm. We'll put the price retracements on here. And for fun, let's put the swing on here. We can tell that that's the low from that swing. So now we're going to put our price retracements there to there, drag it across. Okay, let's turn off the percent swing. And we can see it hits the 38.2 almost to the tick. Very nice. So we go to price retracements, turn off the levels that we don't need to see. Okay, and now let's do a price extension. Price extension here, there to there to there, drag it across. That confirms that this is indeed TCG 38.2. So let's look at a way to enter this trade with a minimal amount of risk. In this example, we can use a 1-bar reversal strategy to enter right here without putting the stop way down here. To do that, we go over here to Tools, Beck's Toolkit, we go to X-bar trailing stop, and then we click above, let's just click above here, and we right click it. We go to the properties of the X-bar trailing stop and change it to 1. Okay, close. Okay, so let's just zoom in here a little bit. The Gartley pattern was complete on this bar here when it touched a 38.2% retracement. At this point, we would be looking for a place to enter, to buy. Now, what we'd be doing in this case is looking for the highest high of the previous bar. Okay, so over here, once it touched this, we would say, oh, what's the highest high of the previous bar? This level right here. And then the next day comes along, and this bar here is an inside bar, so we don't count that one. And then we come along to the completion of this bar, and what was the highest high of the previous bar? After skipping this one, the highest high is right here. So at 32.81, that would be our entry point. So just enter 1 point above this high here, and we would have entered long right here. Where would we put our stop once it's in place? Let's turn off this and this so you can see once you're in here, we use the lowest low right here, and that would have been the day when the bar touched the 38.2%. So the risk is really quite low on this trade. We can set our targets here. Go to Beck, single end scale out, say that we enter here, and then we put our stop below this point, and we would have gone up and hit our first 2 targets here. We'll be talking about that, reviewing that strategy here in a bit and putting it all together, but in this example, you would have had your protective stop here, you hit the first target, you hit the second target on this day, and at that point use a big loose trailing stop. And one of the strategies that we like to use is going from a daily to a weekly. Okay, so we would have entered here, and then we use a 3-bar trailing stop on a weekly chart. Now we can see that it obviously topped out here, but to apply the 3-bar trailing stop on the weekly, we would go here, put the 3-bar trailing stop underneath here, and we would have entered, as we can see on the green line here, would have been stopped out at 33.45 or 33.46 on the cocoa. So made a little bit of money on that last one. We gave back quite a bit here, but the whole idea behind the third contract that we'd be trading with the single and scale out method is to have a lottery ticket trade, and unfortunately it turned around here and came back down, but this is still a profitable trade. We hit the first 2 targets and our trailing stop would have been profitable as well. Now that we covered off some of the tools that we can use for Gartley trading method automation, let's now consider putting everything that we've learned all together into a comprehensive trading plan in the next session entitled Putting It All Together.